Hi, I'm Nicola McKenzie, founder and mortgage advisor here at DM Mortgages. And in today's video, I'll be explaining how credit scores work and how you can improve yours. And this will help to put you in the best possible position to help you to prepare to buy a property or apply for any other form of credit. So stay tuned. Now, before I get into the detail of today's video, make sure that if you enjoy the content, you subscribe to the channel and hit the notification bell so that you never miss any future uploads. Now, to give our viewers the best viewing experience, DM Mortgages do not monetize this channel. So in return, to show your support for this channel, when the time comes to look at your mortgage or remortgage options, make sure that you head over to our website, which is dm.mortgage, and there you can book in for a free of charge appointment with our specialist mortgage advice team. Now, it's also worth you being aware that this video is part of a whole series of videos that's dedicated to helping you to prepare to buy a property. So make sure that you check out all of the other videos in the playlist if you are preparing to buy a property, because you'll find it incredibly useful. Now, let's start with the real basics. What even is a credit score? Now, a credit score is a prediction of your credit behavior, and it helps a prospective future lender to determine and predict the likelihood of you repaying a loan back on time. And it's based on information that's held about you at credit reference agencies. Now let's look at what a good credit score looks like. Now, you have to be mindful that every credit reference agency uses a different scale as to how they measure your credit. But typically speaking, most credit reference agencies will score you from 0 to 999. So of course, 999 is the top end of the scale. That's an excellent credit score, perfect credit score. 0 is the worst you can get. Now, most people fall somewhere in between those two numbers. So I'll give you an indication as to what category you might fall into. Now, before I give you a bit more of an idea on the scale if you fall between those two numbers, which it's likely you do, obviously a higher score means that lenders perceive you as lower risk. So what that means is that you're going to be eligible for better deals, better interest rates if you're applying for a mortgage, a loan, a credit card. But it also means that you're probably going to also be eligible to apply to more lenders. There will be more companies willing to offer you credit the better your credit score is. Now, the one thing that you need to understand is that there is no magic number when it comes to your credit score. So different companies will be looking for different things in their potential customers. And whilst you may not tick all the boxes with one lender, you may tick it with another, because sometimes we get clients that we get an agreement in principle and the lender, even though they've got an excellent credit score, still doesn't like something about that person's particular situation. And one of the things as well that you have to understand is that a credit score, so if you apply to a bank to get an agreement in principle, they will not even tell us as brokers what the score number is that they're going to judge that person on. They don't have one, because a credit scoring system is so complex and it's built up with them taking information from so many different things and different credit reference agencies that it's just impossible for them to say, right, we only accept applicants that have a credit score above 600, for example. And because every credit reference agency scores things differently as well, it's not just a case of knowing exactly what the number is with a lender in order to pass that particular benchmark. It doesn't work like that. So as far as we're concerned as a broker, again, because obviously we deal with large volumes of clients and help them find mortgage deals, we know from experience the kind of credit profile that certain lenders will be attracted to over others. So again, I think that just really, I'm reiterating why it's important to make sure that you've got an experienced broker on your side, because it's really going to help you to be placed with the best lender for your situation. Now, as I mentioned, every credit reference agency does use a different scale, but most are between 0 and 999. And typically speaking, anything above 960 is considered excellent. If you fall with a score between 881 and 960, typically that's viewed as a good credit score. If you fall between 721 and 880, that's typically described as a fair or an average score. Anything below that number, then again, you're getting into the territory of fair to poor scores, okay? Now that's really, like I say, a rough guide, but that should help you to determine where you sit on the scale. I think for anybody watching as well, whatever scale you're working with, so if it's a credit reference agency that scores out of 1,000 or 500, then try and aim to have at least 80% or above worth of points on that particular scale. So in other words, if we're looking at between 0 and 999, try and aim to have a score 800 and above at least, ideally, as a rough benchmark. Now, like I said, how a lender calculates the score is going to vary because they're going to look at information they already hold on you if you're an existing customer, and also information that's held at credit reference agencies. But it's also worth you being aware that every lender uses a different credit reference agency. So the main three agencies in the UK are Experian, Equifax and TransUnion. But every lender is going to pick one of those three credit reference agencies usually to obtain their information from. Some lenders will even use a combination of 2 out of 3 of those reference agencies, for example. So it's a very difficult thing to pinpoint exactly how they're going to calculate your information. But the point here is the higher your score, the better chances you have of getting accepted for a mortgage and the better deal you're going to be eligible for as well. Now, how you can check your credit score is by getting a copy of your credit file from one of the credit reference agencies. But the best place to go to check your credit report is Check My File, and I will put a link in the description below to help you to get to Check My File. I tell you why that's the best option, because like I said, you don't know which credit reference agency the lender you might be applying to is going to use if you're in the early stages of getting a property. Check My File is unique in that it pulls all of the information from the 3 reference agencies rather than you having to go individually to each credit reference agency. And each reference agency does not hold the same information. So we've had clients in the past where they've had a default on one credit reference agency report, but that's not been showing on another credit reference agency. So it's really important to look at all of the credit reference agencies, and you can do that by doing it in one central location, which is Check My File, and that will tell you about the information that's held on you across the 3. The other reason Check My File is really, really good is because it's color coded, so it helps you to easily identify where you've missed a payment, how many payments, and it's just very user friendly. And I also have a video about how to read and understand your credit report as well. So I would advise you check that video out once you've got a copy of your credit report. As a viewer of this channel, I assume that you're considering purchasing a property in the near future. So it's important for you to know that DM Mortgages are an award-winning team of fully qualified mortgage brokers that provide advice to clients all over the UK. Now, we spend countless hours making free content for YouTube and other social media platforms to help to give you guys sound and useful information to make sure that you're in the best position to make informed decisions. To support this channel when the time comes for you to consider your mortgage options, we want you to book a free online mortgage appointment with a member of our fully qualified mortgage advice team. Because without your help and support, keeping this channel going simply isn't possible. Now, we searched thousands of mortgage products from high street and specialist lenders to find the right deal for your circumstances. And we also provide a free will writing service to every DM client. So head over to dm.mortgage and book in for a free mortgage appointment when the time comes. And also make sure that you subscribe to this channel if you find the content useful. But for now, let's get back to the video. Now, the all-important question, how can you improve your credit score? Now, there are plenty of things that you can do to help improve your credit score, but it is going to take time and patience. So if you're somebody that's got a poor or a fair score and you're looking to build it, it is going to take some willpower and time to start to see those improvements. But here are some of the most common ways to improve it. Now, a really quick way to start with is to make sure that you're registered on the electoral roll at your current address, because this helps companies to confirm your identity, and that can make quite a significant difference. So if you're not already on the electoral roll, make sure that you get registered. Now, secondly, my next tip to improve your credit score is to build it up. I meet some people that are afraid to get credit because they just see it as a bad thing. And unfortunately, that's not giving a prospective lender the confidence that you're going to repay a debt. Because if you can't demonstrate that you're able to borrow money and repay it, then that is really not providing a lender with the evidence that they would want to see. So the point I'm making is that having no credit history doesn't actually help you. Lenders like to see that you can demonstrate you're able to borrow money and pay it back on time. So for example, having a credit card and putting your fuel bill on it and paying it back in full each month, that's just one example. But again, it's important that a lender can see that there is some kind of credit history, because that will give them faith that you do pay back money on time. Now, the next way to improve your credit score is to pay all of your bills and accounts on time. Might sound like I'm stating the obvious, but things like your water bill, your some parking fines as well. If you leave them unpaid, you can get a county court judgment registered against you. So make sure that you're paying accounts on time, because things like having a county court judgment, a default, the more serious things like IVAs, bankruptcies, all of these things, even arrangements to pay, all of these things will really harm your credit score, and they are going to stay on your credit report for 6 years after they are registered. So it's really important that you pay your bills on time, is the easiest way I can explain this one. Now, another way to improve your credit score is to keep what's called your credit utilisation low. So this is essentially the percentage of your credit limit that you're actually using. So for example, if you have got a credit limit of £2,000 on a credit card and your current balance is £1,000, that means that you are utilising 50% of that amount of credit that's available to you. So as a rough rule of thumb, try and keep your credit utilisation around the 25% mark. Now, lastly, a really simple way to improve your credit score is to check to make sure that there are no mistakes on it. So we had a client previously that she had the same first initial and surname as her sister, and the credit reference agencies had mixed up the information. So she had a CCJ registered against her that was actually supposed to be for her sister. So she got it rectified, but ultimately it created, a bit of a delay for her. So check your credit report and just make sure that there are no errors on it. And if they are, make sure that you go to that particular lender, get them to update it, and then also contact the credit reference agency in question and get them to update the information as well. So now guys, once you've improved your credit score, let's look at a few pointers as to how you can keep it looking healthy. So the first thing I'll say here is to limit the amount of credit applications you make. Now, an agreement in principle is not a credit application, so let me just make that clear. An agreement in principle, the majority of lenders will use what's called a soft search. Not all of them, but the majority of them will do what's called a soft search. So a soft search is essentially where they're checking basic information to do with your credit report, but that doesn't leave a footprint on your file that other lenders can see. So in other words, it doesn't have any impact on your credit score whatsoever, okay? Now, a credit application, what I'm talking about here is actually applying for something, okay? So if you're making full applications for loans, credit cards, etc., but you're doing lots and lots of them, other companies can see this, so it's a good idea to space them out. If you're getting a credit card one day, a loan the next, another loan, it looks like you're trying to get lots of credit, and that can raise alarm bells for future lenders. So just space your applications out is what I would say. Now, another tip to keep your credit score looking healthy is to close any unused accounts. So if the amount of credit you have available to you is too high, lenders again might think that you can't handle anymore. So just keep it, any unused accounts, it's good to close them. And a final point is to not take on more than you can afford. So again, just really try to keep on top of your finances and not overstretch yourself. But if you do get into any kind of financial difficulty, it's really, really important that you don't bury your head in the sand, and that you do get advice, and don't ignore the lender in question. It's important to talk to them, because again, lenders are much less forgiving if you're just ignoring those warning signs to say that you're missing payments. So do everything you can to avoid, obviously, CCJs, defaults, etc. But ultimately, if you can't afford to make those payments, make sure that you speak to the lender. But ultimately, if you do have to go down the route of CCJs, defaults, etc., those things will harm your credit score. And like I said earlier, they will stay on your credit file for at least 6 years. So it's really important to just try as much as possible to keep a handle on your finances and understand the harm of what even one single missed payment can do to your credit score. Now guys, what I will say in summary is that even if at the moment you have got a fair score or a poor credit score, it doesn't mean that you can't get a mortgage. So I would still encourage you, if you feel now is the right time to start looking at property buying options, to speak to us, because we help people get mortgages with impaired credit all the time. So it's really important that you do get specialist advice. But today's video, I just thought I'd give you some tips to make improvements to your credit score in the meanwhile. But we're here at Dun & McCarthy to help, to do everything that we can to help you secure the best mortgage or remortgage deal for your situation. And like I say, if you've got a less than perfect credit score, get in touch with us and we can explain to you how we may still be able to help you. So if today's video has been useful, make sure that you hit the subscribe button and the notification bell so that you never miss any future video uploads. Also, if you are ready to start looking at your mortgage or remortgage options, then head over to our website, which is dm.mortgage, and there you can book in for a free mortgage appointment with a fully qualified member of our mortgage advice team. And I'll look forward to catching you in the next video.